Good afternoon, everybody. We're going to do a quick audio test. If you can hear me, please type yes into the chat box. All right, thank you for joining our webinar, Who's the Boss? The Lost Independent Contractor episode. Today's web program will be presented by Withum's Rich Ruvelson and Israel Tannenbaum. Before we begin, I have a few housekeeping notes. Materials for today's presentation can be found in the toolbar located on the right hand of your screen. At the bottom of the toolbar, you will see a question box. All questions pertaining to the webinar content should be asked there. We will do our best to address them. Be sure to answer all of the polling questions to ensure that you receive CPE for today's webinar. If you happen to experience any issues answering the polling questions, please be sure to answer them out of full screen mode. Once the webinar is over, there will be a pop-up asking you to complete a survey of the session. Please take a moment to complete it. It's our way of being able to provide you with the best and most relevant programs possible. And with that, I'm going to turn it over to Izzy.
Thank you so much, and welcome everyone, and thank you for joining myself and Rich for this very special airing of Who's the Boss? The Lost Independent Contractor episode, where we're going to take a bit of a look at who actually was the boss, at least according to IRS rules. So that'll be pretty exciting. On our agenda today, just to get a little more granular, we're going to talk about the new form for the 2020 filing year, the Form 1099 NEC, and the traditional Form 1099 miscellaneous, how to make the determination of independent contractor versus employees, some of the legislation that has recently come across in California and what effect that may have. We're going to talk a little bit about Form W-9, its purpose, and the importance of getting it as soon as possible when working with a vendor. And then ultimately discuss a little bit about what you can do if any mistakes were made, and the voluntary classification settlement program more specifically. And we'll have some time for questions at the end, but absolutely please feel free to share any questions during, and we will address them as we can. So getting started, the 2020 Form 1099 NEC. So beginning with the 2020 tax year, the IRS is going to actually require business taxpayers to report non-employee compensation on this new Form 1099 NEC, instead of the Form 1099 miscellaneous, where it was previously reported. And actually, this is not really a new form. However, the last time it was used, the 1099 NEC, was back in 1982. So it's actually about the same age as me, but it's back and it's better than ever, also like me. But as mentioned, prior to 2020, businesses were using the Form 1099 miscellaneous to report payments totaling more than $600 or more to a non-employee. And this was typically shown in box 7 of the 1099 miscellaneous. In order to really help clarify that there were separate filing deadlines when reporting different types of payments that were made on the Form 1099 miscellaneous, meaning the same form essentially would have several different deadlines depending on the type of payment being reported, the IRS decided to reintroduce this form, the 1099 NEC, which for the most part has a single filing deadline for all payments that are actually going to be reported utilizing this form. Really all other, as mentioned, all other traditional 1099 miscellaneous income types that we're used to seeing, such as rents, royalties, these are going to continue to be reported on that traditional form. And I'll elaborate a little bit on that on the next slide. But just to quickly review the requirements, you typically need to report a payment as non-employee compensation if the few conditions apply. Number one, you made a payment to someone who is not your employee. And while that may seem simple at face value, it is definitely a very complex determination in many circumstances. And that's something we're going to dive into a little bit, and we'll really take a look at. Another of the qualifications in order to be reportable is that the payment was for services in the course of your trade or business. So this is not a payment you made as an individual or a personal payment. The payment has to be made to an individual partnership or LLC. So typically corporations, payments made to corporations would not be reportable under this. And finally, payments to the payee would have had to have been $600 during the year in order to be reportable. And that's $600 in aggregate. And just to clarify, some of the typical types of non-employee compensation that we see are really payments to independent contractors of things like fees, benefits, any commissions, really any form of compensation that's paid for services performed for your trade or business by someone who is not your employee. So in a sense, it's kind of circular in logic in a way, but as we'll see, there are many, many factors that actually go into this determination. And so it's something that is really complex to a degree, although it seems very simple. And the other important thing to note about the 2020 Form 1099 NEC is that the PATH Act had accelerated the due date for filing 1099s that include non-employee compensation from previously, which was February 28th to January 31st. And it actually eliminated the automatic 30-day extension. So essentially, this is now going to be due by January 31st. And this is a change in terms of when the former 1099 miscellaneous would be due. So that's something that's important to note. Going on to the next slide is our friend, the 1099 miscellaneous. This is the one we're used to. This is the one we've seen every year. This is the one that, as mentioned, since 1982 has had all combined forms of payments in terms of its reporting. However, it's not going away, beginning with the 2020 tax year. So now in 2021, when we're filing these, you're going to file the 1099 miscellaneous for each person you paid in the course of business during the year. At least $10 in royalties, or at least $600 in rents, prizes, payments to an attorney, Section 409A deferrals, any sort of non-employee compensation. So this form is definitely still going to be in use, and there's definitely still quite a bit of information that is going to be reported on it. Now, because the IRS had removed the reporting for non-employee compensation from this form 1099 miscellaneous, they've had to do a bit of a redesign. The biggest adjustment that you'll see really comes to box 7, which previously reported non-employee compensation, but now reports direct sales of $5,000 or more. Now, because of this redesign, it's really important that when filling these out, you really take a close look and review the updated 1099 miscellaneous, because many of the boxes have been shuffled around to account for the non-employee compensation box that, as I just mentioned, was removed. So utilizing a same as last year approach would definitely not work. So really be cognizant of where you're putting the information in the 2020 Form 1099 miscellaneous. Aside from the shuffling based on the change of the boxes, there's really no major change to the 2020 Form 1099 miscellaneous. And just to make sure everyone's aware, the 2021 due dates will actually depend. So as you can see, they're listed there. If there's no data present in box 8 or 10, so payments in lieu of interest or dividends, or gross proceeds paid to an attorney, the form itself is due by February 1st, 2021. I believe that's because the 31st is a Sunday, to recipients and to the IRS via mail by March 1st, 2021, or if you're e-filing by March 31st, 2021. Now, there's no amounts in those two boxes. It's actually originally due February 16th, 2021 to recipients and to the IRS by mail the same time frame as if there was data. So that's 3/21 if you're 3/1/21 if you're mailing it, or if you're e-filing, you actually have until March 31st. So that's a bit about the actual mechanics of how ultimately the information is going to be reported. But what we wanted to take a closer look at is really how one makes that determination and why one would or would not make that determination in the proper way. So I'll hand it over to my colleague Rich, who's going to talk about that a little bit.
Okay, thanks, Izzy. Of course, the primary reason that worker misclassification occurs is money, be it an employer or someone paying for an entity paying for a service, doesn't want to pay employer share of Social Security or Medicare, doesn't want to provide overtime pay or benefits, including vacation, holiday, sick pay, health care, don't want to pay unemployment tax, workers' comp insurance. Frequently, it's what the worker wants because they look at their paycheck and they say, hey, wait a second, rather than having a W-2, we get a 1099, then we report our income on Schedule C. And on Schedule C, in determining our self-employment tax and our Medicare, it's net of our expenses incurred. So that, again, it's a monetary reason. The other reason frequently is what I call sometimes the rule of the lowest common denominator. Well, others do it, and they maybe they're in our industry or they're in our community, or maybe they sit on our board. We should do it too. Well, that's generally not an acceptable excuse. So between ignorance and money, those are the reasons that misclassification occurs. How does it surface? Well, it's very easy to surface, and it's gotten a lot easier. Number one, you've got an IRS audit in the ordinary course of your activities. They're auditing your 990. But what's become even more common now is a 1099 audit. So they're actually looking at this relationship. And we have seen this type of audit with our voluntary employee benefit associations, our VEBA clients. We've seen this frequently because we have health and welfare VEBAs, and they make payments to physicians and payments for medical services. Worker relationships terminate. Sometimes it comes up and you get someone is no longer going to be getting their paycheck. So even though they were an independent contractor and they were aware of it at the time and they fully supported it, when their project or whatever it is that they're working on ceases and their checks from you cease, then they go down to unemployment and file an unemployment claim. And that's happened as well. And that was what caused an audit that, where we, and a situation where we ultimately went in with the client for under the voluntary compliance program, which we'll talk about later. Individuals bitter. They want to keep working or they're mad at you. So they go down, they file an unemployment claim. Sometimes you can have someone and you might think, wow, this service that they're performing something that's outside of their traditional job. It's so different that we're going to pay them as an independent contractor for that and pay them as an employee for their job. Happens all the time. And if the service comes in, if you get pulled for audit, guess what? That kind of situation comes up. That is a situation that is identified with respect to analytics that the IRS is now running on organizations. So, there again, you see something. Also, as we're going to discuss a little bit later, it comes up in connection with someone being a contractor in the new economy, the gig economy. And we're going to spend a little time talking about AB 5 in California, as well as the recently enacted Prop 22. So we're going to talk about those. So
And
again,
Rich, I just wanted to add to that, to your point. I think it's something that we've seen a lot more of over the last year where this is surfacing just because of COVID and the enhanced unemployment benefits. There were probably a lot of situations where people wanted to be considered employees versus independent contractors so they could collect on those. And so I think this is something that we're really going to see a lot of activity around in terms of those IRS audits you're talking about.
yes, and one of the things that you should know is that the tax exempt organizations, governmental entities division of the IRS, TEGE, took about 300 auditors about 2 years ago from the governmental employer section and assigned them to tax exempt organizations. When they were at government employers, those people primarily audited independent contractor employee relationships. When they put them over into the tax exempt organizations group, they actually moved them onto auditing tax exempt organizations, but they still have all that independent contractor audit training. So that's what they're used to looking for, and they like to look for that. Why do they like to look for that? Because that's where the money is typically on the audit of an exempt organization. It's on penalties. Where's the easiest place to find penalties? Independent contractor employee relationships that aren't correct. So how does this surface again? More areas where it surfaces: workers' comp claims, Fair Labor Standards Act, wage and hour laws, ERISA audits, Family Medical Leave Act, Labor Relations Act, anti-discrimination laws, and tort and contract liability matters with respect to lawsuits that get filed, both by the individual that you're paying, but also maybe by someone they dealt with. Maybe there was a harassment suit against them in the office, or from a customer. So you really don't know, but these things can crop up all over. And the other thing that this slide represents is a range of all the exposure you have. It's not just tax exposure. If you get this wrong, you may have all these other laws to deal with as well. So got to really be careful. So what do you have to do? The first thing you have to understand before you get into classification is knowing your business relationship. Before you determine how you treat the payments to a service provider, you've got to understand the relationship. The person performing the services could be an independent contractor, could be a common law employee, or a statutory employee, or a statutory non-employee. An independent contractor, generally that's someone or an entity selling their services to the general public. The classic examples are lawyers, accountants, doctors, contractors, and others in an independent trade or business or profession in which services are offered to the general public. Well, what's interesting, and I think Izzy, if I recall, Izzy mentioned this with regard to the NEC and the 1099 miscellaneous payments to doctors and lawyers. Those are payments where, under statute, reporting is required, even if they're a corporation. But another example, accountants. We're independent contractors. Although in our case, with them, because we are a professional corporation and not a partnership or an LLC, 1099 reporting is not required. Others in independent trades or businesses, think of the advertising agency you may hire. So, this is a who's the boss, episode. So Angela Bauer, played by Judith Light, she was an advertising executive. And so that could have been an independent contractor relationship. So, services offered to the public. One of the things I do want to remind you is that you may sometimes pay for relationships with a payment card. And especially if you're using a caterer or, sometimes a hotel, those may be independent contractor services. But if in fact you're using a payment card, then they go on that particular 1099. They don't go on the 1099 miscellaneous that you file. They'll go on the 1099 from the payment card company. Someone not an independent contractor, primarily you want to look at control. Does the person paying for the services control the services? What's going to be done and how is it going to be done? This applies even if the individual is given freedom of action. So think, for example, of a teacher. If you supply the class, you provide the times they teach, you give the grades, the grades come from the school, you're typically not going to have independent contractors. Your teachers are going to be employees. If workers are independent contractors under the common law rules, workers may be treated as employees by statute. Those are statutory employees for certain employment tax purposes. If they fall within any one of the categories shown on this next slide and meet the conditions described under Social Security and Medicare taxes. So these are all the conditions. This is where you have statutory employees, drivers distributing beverages, produce, other things, insurance agents, individuals working at home on materials or goods that you supply that must be furnished to you or a person you name. Wait, I hope that doesn't apply to us now. So, that wouldn't be good. Full-time traveling or city salespersons who work on your behalf and turn in orders to you from wholesalers or retailers. Those are examples of statutory employees. You withhold Medicare, Social Security, and Medicare taxes from their wages only if these conditions are met for statutory employees. And these are pretty firm, these are firm rules. So you have to have met all of these conditions. Contract specifies substantially all the services are personally performed. There's no substantial investment in equipment and property, and the services are performed on a continuing basis for the same payor. Here are statutory non-employees, which we're not going to get into too much. And with that, we're going to go to our initial polling question.
All right, polling question number 1. Tony gets a second job as a museum guard at the Fairfield Museum and History Center in Fairfield, Connecticut. Tony, who will be guarding the sculpture garden, will be a statutory employee, an independent contractor, a statutory employee, or none of the above. Just as a reminder, make sure to answer all of the questions so that you receive your CPE credit for the day. All right, just a few more seconds and then we're going to close it out. I see about 70% have voted. Rich and Izzy, we also have a few questions that came through too. So if you'd like to go over them at any point, just let me know and I will read them out to you guys.
Okay, great. Yeah, I think we can take a couple questions.
Yeah.
All right. So I'm going to close out the poll. We'll see what the results are and then we'll hop into the questions. Okay, so it looks like 49% voted for a statutory employee. All right, so our first question is from Stella. If a vendor payment is made via credit card, do we still have the 1099 filing requirement, or the 1099 filing is done by the credit card company?
The 1099 filing will be done by the credit card company. So you don't have the requirement. And let's just go back to the polling question. 49% of you said that Tony would be a statutory employee. That's not correct. Tony wouldn't be an independent contractor because he has to be at the museum. They tell him the hours, they tell him how to be a museum guard. Unless he was hired by, a service that, provided guards, then they would be the independent contractor and Tony would be their employee. The other choices are that Tony would be a statutory employee or none of the above. Both of those may be considered correct. Why would Tony be a statutory employee? Because he's guarding a sculpture garden. So he's guarding the statues, which makes him a statutory employee. Or if you didn't find that humorous, none of the above. So with that, we'll go to the next. What's the next question?
The next question is by Richard, another Rich. Does a non-business individual who periodically receives assistance from a health aid have to file a 1099 NEC for payments made if over $600 for the year?
So I guess, and correct me if I'm wrong, Rich, I guess that would depend on if it's being paid directly to the person or if it's being paid to a service as part of, an independent contractor service. So if you're paying it to a service that provides home health aides and the payments are in excess of $600, you likely would need to report that on a 1099.
Right. And very quickly, a question that we get all the time has to do particularly with housing. And many agencies provide rental assistance payments. And if the landlord is paid directly in your trade or business, and the landlord is an individual partnership, or an LLC, that you have to report, either your agency or organization has to report that rental assistance payment because you are paying it in your trade or business. If the individual paid the rent, then they wouldn't have to report it. But if you make the payment in your trade or business, then it has to be reported. So with that, I'll turn it back to Izzy.
Excellent, thank you. So we did want to take a look at, now that Rich has kind of laid out what the different classifications are, where does this come from and what is the basis for this? So the IRS actually uses common law principles to determine whether a worker is an independent contractor or an employee. Now these rules focus primarily on the level of control that an employer has over the service or product, meaning whether the employer defines what is being done and how the employee in that sense would accomplish it. Now, in determining whether the person providing the service is an employee or an independent contractor, all information that provides evidence regarding the degree of control really has to be looked at, because this is something that is extremely facts and circumstances dependent. Now, in the past, the IRS actually used a 20-factor test to evaluate workers to determine whether they were independent contractors or employees. Presently, these 20 factors have been compressed into 3 general categories that the IRS says they will look at in terms of examining whether you have made this determination properly. And those 3 are behavioral, essentially control, behavioral control, financial control, and really the relationship of the parties. Each factor we will take a closer look at and what they entail in the next few slides. However, first, it's really important to be aware that the IRS is not going to look at any one specific factor. But that said, one factor can be enough for the IRS to determine that a worker is an employee versus an independent contractor. So it's really important to understand that there are many, many instances that can affect this. It's also important to note that the 20 factors still do apply and are applicable. So just because the IRS has condensed them into these 3 that they're going to look at, when you're making a determination and when you're documenting that determination, you really should continue to look at the legacy 20 factor test to ensure that you're going to be able to provide a substantial and definitive answer to any questions the IRS may have, because again, they are going to still be looking at the principles that were laid out in the 20 different factors. It's also important to note, and I know Rich is going to talk a little bit more about this later, that each state has its own way to evaluate the status of workers as well in terms of both wages, hours, working condition requirements, and employee and independent contractor status. Several states, and I know more are joining this all the time, are using what they call a 3-factor ABC test. And essentially, if you meet all these 3 factors, a worker could be considered an independent contractor. The 3 factors are: the worker is not under the control of the employer for the performance of work. The worker must not be within the usual course of the employees. The work must not be within the usual course of the employer's business. And the worker must be customarily engaged in an independent trade or business that is the same as the work performed for this employer. So these are the factors that the states are going to take into account, or many states will take into account when making these determinations. And I know Rich is going to get a little bit more into detail on that later. I also wanted to note that you do have the ability to apply to the IRS using the Form SS8 to get a determination letter telling you how they see your workers as employees or independent contractors. But you should note that the IRS standard interpretation typically leans toward classifying as an employee versus an independent contractor. So you should decide, you should consider that when deciding whether you want to go down that road and get an official determination. Now, if you have incorrectly classified workers, I know we're going to talk a little bit about how to fix that later. There is another way, what's known as a 530 relief application, that allows you to essentially get relief for having misclassified workers. It really takes a look at your good faith efforts to comply, how you made the determination, but as we'll see later, it's likely more beneficial for several reasons to go through the VCSP. And I know Rich is going to elaborate on that a little bit later. So just to take a closer look at the different factors, the condensed 3 factors that used to be 20 as mentioned, that the IRS is going to look at. The first one being the behavioral control, behavioral evidence. Now, what they're really going to look at is, does the organization have the right to control what the worker does and how the worker does his job? As we know, the idea behind independent contractors are that they're self-employed, and this really means that the employer has control over the result of the work, but not over the work itself, the hours, any vacations the employee wants to take, the tools used, the skills required for it. These factors are all either controlled by the employee themselves or acquired by them. Maybe it's, for example, a construction company where they hire workers. Really, there should be very little to no behavioral control over the individual and how they perform their tasks in order to establish them as an independent contractor and establish that that was the correct classification. Now, when examining behavioral control, we have to look at the different factors that really show whether the business has a right to direct and control how the worker does and what he does. And these typically include, as you can see, one, the type of instructions given. So that's when and where you're doing the work, what tools should be used for do the work, what order should the work be done in, and finally, who to hire to assist with the work. When it's an employee situation, you're not typically able to just go hire someone to work under you to perform the actual work that you were contracted to do. Whereas independent contractor, that's a fairly common thing. So type of instruction would be one of the factors that the IRS is looking at when looking at behavioral control. Some others are the degree of the instructions given, whereas more detailed tasks are likely to indicate employee status. Typically with an independent contractor, you're more focused on the result and what you want to get out of it versus actually giving instructions on how to get to that result. That's more their job. That's what you're hiring them for. The system of evaluation, typically if you're evaluating how the work is performed, that would speak to an employee relationship. If you're evaluating the end product of the work performed, then it probably speaks to independent contractor status. And finally, training. So if you provide on-the-job or continuing employee education, job training, that probably speaks to someone being your employee, whereas an independent contractor typically has to go out and obtain and spend on those types of training and continuing education items on their own. So the next factor is financial evidence or financial control. So essentially, when looking at financial control, we're looking at whether the business aspects of the worker's job are controlled by the payer. So things like how the worker's paid, when expenses are reimbursed, who provides tools or supplies. Now, typically when one chooses to hire an independent contractor, you would determine a fee either by the hour or for the project. There would typically be no additional expenses and no guarantee that you would hire them again once this project is finished. So many of these factors in terms of the financial aspect really do speak toward whether they would be an employer or an independent contractor. Some other ones include the fact that if it's an independent contractor, there's typically no withholding, cost reimbursement, and really you could choose, should you want to have several different subcontractors working on the same project or doing the same work. On the contrary, where you have an employee, they're typically entitled to a regular salary, a guaranteed income, and an employment relationship typically has different protections for both parties, and the US Department of Labor actually regulates the relationship. So as we can see, there are a lot of issues, and I think to Rich's point before, which was very well expressed, it's not just about the taxes or the penalties. There are many different labor laws and other issues that you could come into conflict with a misclassification. So in looking at financial evidence, there are a few different factors that the IRS is going to focus in on and really take a look at whether the business hiring the employee or independent contractor has a right to control the business aspects of their work. So some of these factors include significant investment, where an independent contractor would typically have to invest on their end in their own equipment, workers. It's important to note that no precise dollar limit exists that would speak to one status or another, but ultimately all the factors should be considered, and that would be one of them. Unreimbursed expenses, so typically independent contractors are more likely to have unreimbursed expenses. They're responsible for their own expenses and you have your agreed upon fee. That's typically the situation you would see. Opportunity for profit or loss. This is actually one of the key factors in determining employee versus independent contractor, essentially who's bearing the risk of losing money on the project they're hired for. If it's the person who's hiring the contractor, that probably speaks to an employee relationship. Services available to the public. So independent contractors typically are free to seek out other business opportunities while they're engaged on a project. So they may have multiple clients and multiple projects they're working on, whereas employees are often precluded from having other employment outside their current jobs. So that would be another key way to look at this in terms of making that determination. And finally, the method of payment. So as we mentioned, employees are typically getting a regular wage, whereas contractors are often paid a flat fee. That said, many professionals may be paid hourly as well and still be independent contractors. So it's really critical to explore all the different factors around the specific situation. And I know that's something that we're going to keep repeating, but this is probably one of the areas that are most fact-based. And, I think the fact that there was previously a 20-factor test to determine this really speaks to that. So looking at the last sort of overriding major factor that the IRS is considering, or the last of the three condensed factors anyway, is essentially the relationship you have with the person you're hiring and how long it will last. Things that they typically would examine are whether there are written contracts or employee type benefits, pension plan, insurance, vacation pay, that kind of thing. The permanency of the relationship in general is a significant factor when it comes to misclassification. So the more stable and long-term a relationship is, the more likely the IRS will view it as an employee, whereas an independent contractors would usually be hired on a temporary or short-term basis. So that being another key factor. And in addition to this, if the person you hire is vital or a core part of your business, it's much more likely that they will be considered as having employee status. And so just to kind of take a bit of a more detailed look at these, when looking at the type of this bucket of relationship that the IRS is going to look at, these are a few of the different factors that they'll get a little more granular on. So written contracts, as we said, again, it's important but not definitive, because the IRS is not required to rely on the definition that you have contracted under. So while it may say you're hired as an employee, if the IRS determines otherwise, it's not really going to make a difference what is in the contract. Benefits are a really big one. Independent contractors do not typically receive benefits. And this is, kind of going back to what we were talking about misclassification. This is one of the issues that can really arise, as not having offered required benefits to someone who is eligible would be a benefit plan violation. And that could result in major issues for an employer, including under ERISA violations. So I think it kind of goes back to what we were saying earlier about how there are a lot of moving parts and a lot of different things that are affected by this determination. And that's why it's just really critical for employers to get this right. Permanency of relationship, as we said, if they were hired for an indefinite period rather for a specific time frame, it's more evidence that you were attempting to create an employer-employee relationship. And as mentioned, if it's a key activity, it's also more likely that you will be considered an employee, especially when these are combined. So a key activity, for example, with a permanent relationship or an ongoing or indefinite relationship would combine to make a compelling case that you should be treated as an employee versus an independent contractor. The next slide, if you please, Rich. So ultimately, just before we get to the polling question, businesses must really weigh all the different factors when making this determination that we've just gone through. Really, some factors can indicate an employee, others will indicate an independent contractor, and this can be in the same circumstance. And what really complicates it is that no one factor will be able to stand alone in making that determination. And again, this is very facts and circumstances based, and what's relevant in one situation may not be in another. So it's something that really has to be directly examined, but ultimately it's really important to remember that, as mentioned, the IRS is going to presume that a worker is an employee unless proven otherwise, and the burden of proof is going to be on the employer. And as mentioned, the IRS is always inclined to skew toward classifying as an employee. So it's really critical for organizations who are sitting down and making this determination to make sure they document very clearly how they came to this determination, in case there are questions or in case it is examined, So they will have that sufficient data and not run afoul of any of the issues that we've been talking about. And with that, I believe we are at the second polling question.
All right. Polling question 2. Angela opened an advertising agency and hired Tony as a ringer on the company baseball team. A nod to his past. Tony had his own bat and mitt, but was an employer rather than an independent contractor. True or false? Please get your votes in. These will count towards your CPE credit. All right, and just 2 more seconds and we're going to close it out. And we're closing the poll. And it looks like 43% voted true, 57% voted false.
Okay, Tony would be an employee, told when to go to play baseball, where to go, and presumably there's someone who tells him where to play. Even though Tony brings bat and mitt, frequently employers bring some of the tools, or employees bring some of the tools to perform their jobs. So that does not make someone an independent contractor, but otherwise there would be the control factors there.
Yeah, and that goes back to what we were saying about how no one factor determines it, but the IRS can rely on one factor to say that it's an employee or the other way. So
Okay, so we are running very low on time. So we're going to go through these last few slides very quickly. And really, I'm going to initially talk about California Assembly Bill AB 5. Izzy spoke of that. That's the ABC test for determining who is an employee or who is a contractor. And that AB 5 was statutorily enacted in California after a Supreme Court ruling. And so it was enacted, and many of you have out in California or with contractors or employees in California have had to change relationships. Well, the gig companies didn't like AB 5 and spent over $200 million on behalf of Proposition 22, which was on the ballot this past election. And this didn't do away with AB 5 for anybody other than the gig employers. And under that, certain individuals maintain their drive, in particular the drivers, and maintain their independent contractor status, although they are providing some benefits under Prop 22. And some of you are saying, why is this important? Well, this is where the law is going to be going in your states. Those states that have initiative and referendum, even some locales with initiative and referendum, the rideshare companies and the delivery companies are all set to spend money in jurisdictions to expand upon having this enacted in California. At the same time, the ABC rule was also being enacted by a number of states. So the California rules, both the ABC test and now Prop 22, are both being enacted across the country, or will be enacted. And remember, they're not mutually exclusive. And these are benefits that gig-based workers get under Prop 22. And remember, this is a lot less expensive for these companies than these individuals becoming employees. So with that, we're just briefly going to mention W-9. And Izzy, I'll just go through this real quickly because we are very out of time. Before you make a payment to anybody as an independent contractor, get a W-9. You may get, they may say, here's my tax ID number, but you know what? You want that W-9. The reason you want the W-9 is that if there are errors in the reporting on the 1099, the IRS can penalize you for backup withholding if you didn't get a W-9. And I have a situation where there ended up being criminal activity on the behalf that was conducted by the individual who was getting paid. And when the IRS read about this in the newspapers, they showed up and they wanted to know where their W-9 was. And this organization had the W-9. So they were not penalized for having not done backup withholding. But otherwise, you are not required to file that with the IRS, which brings us to our next polling question. Form W-9 must be filed with the IRS. Is that true or false?
I think, Rich, to that point, everyone, like we said, it's important to get it, and it's important to get it up front when you do have the maximum leverage to receive it, right? Vendors want to get paid. So in order to get paid, if you require a W-9, that's when they'll be most willing and most forthcoming with getting that back to you. And so you can ensure you have that information. So I think it's a really best practice to obtain those upfront and certainly prior to making any payments to the vendors.
Ashley, do you have how many people answered true or false?
Yep, so we had everybody, we're all closed out. So there is true, 18%, false, 82%.
Correct. All right. Izzy, do you want to finish up, or I can?
Sure. So yeah, why don't you talk a little bit about the VCSP?
Okay. The VCSP is a program that the IRS has had for a number of years at the suggestion of Congress. And that's if you have a classification of jobs, a particular position. In the case of one of my clients, it was trainers. We were able to go to the IRS and reclassify them after, as employees, and then get the benefit. We only had to pay 10% of the tax liability for the prior years, and that was for the most recent year only, and we weren't liable for any interest or penalty on the amount. Nor was there any employment tax audit with respect to those people for prior years. Now, this all came up in the context of an unemployment audit in a state where my client had no employees, but they did have these trainers. And so what happened, one of the trainers, who was happily an independent contractor, when they were done with their training, went and filed an unemployment claim. So that was how this got caught. But we were able to come under the rules before we got our written audit determination, and able to come up with the rules. And we reached a settlement, and literally we settled for 10% for 1 year of what our entire penalties would have been, and penalties and taxes. So instead of, we spent about $12,000, instead of over $100,000. That's the benefit of the voluntary classification program.
Right,
Is
and I
he?
think and just to that point, Rich, I think we said that in general, that's more beneficial to go through than the 530 relief that I mentioned earlier, just because the IRS through 530 relief is more inclined to make that determination toward employee versus independent contractor. Has that been your experience as well?
That's been my experience, and one of the things you have to be particularly careful of, the 530 relief that Izzy mentioned is something that can be requested both by the payor and by the individual receiving the payments. And sometimes if someone's not happy, frequently if you're treating, they've decided they don't want to be an independent contractor, and they want you to withhold Medicare and, Medicare tax and FICA taxes and the employer's share, they will frequently ask for 530 relief, and then you're stuck. And usually the answer is going to be, as Izzy indicated, that individual is an employee.
That's right. And so just before we get to polling question 4, in terms of non-resident aliens, we just did want to point out that non-resident alien individuals who perform services in the US are typically considered independent contractors, or who are considered independent contractors are subject to different rules than US residents. And this is really another critical reason to get that W-9, because that's how you'll really learn and have a certified classification understanding from the people who you are paying. So this is going to make a difference in a lot of different areas, and it just saves a lot of headaches if you make it a consistent practice to obtain these upfront. And with that, I believe we are at polling question 4.
All right. Who played Angela's mother, Mona Robinson? Judith Light, Alyssa Milano, Catherine Heldmond, or none of the above? This is just a for fun question.
Hopefully
Just want to
people
make
have
sure
seen
you're
Who's the
engaged.
Boss. If not, can always Google it. I'm sure the episodes are on Hulu or something. It's a worthwhile viewing.
All right, and we're gonna close it out in just 2 seconds. All right, and we're closed. Looks like everybody, majority, 39% voted for none of the above, 42% voted for Catherine, and 13% voted for Judith.
Catherine Hellman.
Most people got it right. It's good. That's well done.
Yeah, and that means that many of you didn't have your phones out during the course, and thank you for that. So with that, we will, of course, take any additional questions, and you are all welcome to contact either one of us via email with questions, and we are happy to answer those for you. And so thank all of you for joining us today. Thank you, Ashley, for making this happen. And best wishes for a happy holiday season and a happy new year. So thank you very much.
Great. All right, we do have 3 questions that came in. Would you like to answer them, or we can reach out to the individual?
If we can stay on, we're happy to.
Yeah, all right. So we contract guest artists for a one-time concert performance. These have always previously been considered ICs, especially since they often have to turn around and pay a percentage of their fee to their manager or agent. In California, is this still an IC?
I don't think, if under the facts it hasn't changed under AB 5, it would still be an IC. And my reaction to that, having spent much of my career there, in that type of a situation, there is a certain artistic control that is exercised by the artist, and they would remain an independent contractor.
Right, and I think that's different from, hiring for a one-off concert or engaging someone for a concert versus engaging someone for a year-long tour, for example, or something of that nature. So, within the same situation, it could probably go either way, but I agree. I think based on that assessment, it's very likely it would be an independent contractor.
All right. Salvatore asked, I have seen many times employees getting a W-2 for working and receive a 1099 for a car allowance. Shouldn't the car allowance be included in the W-2?
If the car allowance is provided as part of employment, yes. Anything there's no justification for a benefit that's provided via employment to be on a 1099. And so, a great example of that is excess group term life insurance. That's reported on your W-2. And it's included in income. It's not included, it's not reported on a 1099. And a car allowance, think about it, that would be compensation. It's compensation for services. So the services are employment, and that's how it would get reported. So, Izzy, any comments on that?
No, I agree. Again, it's gonna, if you are an employee and that's how you're being paid as an employee on a W-2, and that's how you're being afforded the ability to use the vehicle and that benefit, I think it would be a hard sell to get them to agree that that should be 1099 as an independent contractor. Now, where I more see things like that, where it's split and someone's receiving both, is if either they were first an independent contractor and then got hired as an employee, or vice versa. But other than that, if you are an employee, it's probably, like I said, a much harder sell to say that anything is being paid to you in capacity as an independent contractor.
All right. And then the second to last question, do you have to send 1099 forms to Incorp doctors who earn less than $600?
So if it's less than 600, you wouldn't have to send it regardless. So you should be okay. And if it's a corporation, I think you likely wouldn't need to as well.
Correct.
All right. And last question, we have until 2:10 about, so we're just about wrapped up here. Can you discuss the hybrid classification? When is it okay to only take out the state unemployment taxes and not take out FICA, Fed and state? Sorry, let me just pull out the full question. Uh-oh. Sorry. 1 second.
While Ashley's looking at that, I just want to mention the time when I used to be the corporate tax director at a large university, and I happened to meet some of the coaches, and I told them what my job was at the university, that I was the tax director. And so the head football coach said to all of the other coaches, Rich is the guy who puts our country clubs and our cars on our W-2s. And that was not a great way to be known to the football.
Yeah, no one's gonna reach out to you now, Rich.
No.
Okay, so what I was trying to make out, can you discuss the hybrid classification? When is it okay to take out only the state unemployment taxes and not take out FICA, Fed and state, I believe withholding WH.
That would be the statute. Those would be the, when we're talking about statutory employees. And I would look at, you can look at that slide, and I would also suggest that you look at the IRS website, which, if I recall correctly, has a very good page on statutory employees. So, Izzy?
Yeah, no, I was going to say the same thing actually. The IRS does have a great write-up and a great page talking about statutory employees, the determination and the consequences. I would definitely check that out.
So,
All right, and we probably have time for one more, and there is one more left if you guys want to answer this last one.
Sure.
All right, vendor invoice includes equipment and rentals and labor fees for delivery, setup, etc. Do we need to split between 1099 and NEC forms, or since the main purpose is rented equipment, can it all go on a 1099 in box 1?
Izzy, do you want to talk about how you'd handle that?
I think I'm trying to think it through. I think it would be 1099 box 1. I think you're paying for the company for the rental. I don't think it's, but you're paying them a fee for service. I don't think it's necessarily bifurcated between the different types or the different items that you are paying for. So likely it would all just be considered as a single fee in terms of reporting it.
I'm in agreement with Izzy on that. And remember, to the extent you have expenses, you're reporting the income, and those expenses, for example, salary that's paid to the individuals, are going to be deducted as expenses. So, they'll have income and they'll have the expenses. So,
All right.
we're in agreement.
All right. Great. So that wraps it up for today. So thank you everybody for attending the webinar. Thank you to our presenters, Izzy and Rich. And just as a reminder, please take a minute to complete the survey and stay safe and warm for those who are experiencing snow today, and have a great day.
Thank you all.
Thanks, everyone.